This week on Islamic Markets Briefing, we will cover Brunei's plan to build a Shariah-compliant digital finance center, the financial results of some leading Islamic banks, IDB's new president and group chairman, and Malaysia's leadership on the global Sukuk market. On Expert Talks, we'll be hearing from Mufti Faraz Adam, Executive Director at Amanah Advisors, on their Sharia views on buying and investing in cryptocurrencies. Hong Kong-based Green Pro Capital announced that it had signed a public and private partnership investment agreement with the International Halal Trade Hub and Service Corporation with the objective to build a Sharia-compliant digital finance and economic zone in Brunei. The agreement aims also to meet East ASEAN Growth Area's initiative to drive innovation-based development and to also facilitate and promote the development of a Sharia-compliant digital finance center. The new zone would be the first economic zone to be developed and to operate under a PPP program in Brunei. In Indonesia, CIMB Niaga Sharia saw its profit increase 35% year-on-year to Indonesia rupiah 851 billion as of the 30th of June 2021. This double-digit growth in profit was driven by the consumer banking and the MSME segments. The consumer banking segment, which accounts for over 50% of CIMB Niaga Sharia's total financing portfolio, grew 20% year-to-date thanks to rises in housing, automotive, and personal financing. In the first semester of 2021, BCA Sharia saw a financing growth of 3.47 year-on-year. According to Pranata, director of BCA Sharia, the bank is still challenged by the economic slowdown and low demand for business expansion financing amidst COVID-19. When compared to the average growth of BCA Sharia in the past years, financing growth remains below average. UAE-based Ajman Bank reported 61.9 million dirham in consolidated net profit for the first half of the year 2021, reflecting a 44% year-on-year increase. This rise was driven by a recovery in the UAE economy, resulting in rising consumer and corporate confidence seen across Ajman Bank's businesses. His Excellency Dr. Mohammed Suleiman Al Jasser has assumed office as the new president of the Islamic Development Bank and group chairman on the 9th of August 2021. Al Jasser took over the role from His Excellency Dr. Bandar Hajar, who completed his 5-year term in office and handed over the responsibility during a farewell ceremony at the IDB Group headquarters in Jeddah, Saudi Arabia. Speaking on his first day in office to IDB Group staff, Al Jasser highlighted that the main priority is to overcome the immediate challenges of the COVID-19 pandemic, to support the rebuilding of stronger economies of IDB member countries, and to move towards nurturing new sectors for investment and growth. In its 2021 annual Sukuk report, the International Islamic Financial Market stated that the global Sukuk issuance of 2020 amounted to a record high of $174.6 billion, with Malaysia having a market share of 45.1% of global Sukuk outstanding. According to Khalid Hamid Al-Hamid, chairman of IFM, the impact of the pandemic was limited to a few corporate issuers, with Sukuk remaining an attractive instrument overall, continuing its positive growth trajectory during the first half of 2021. The Saudi Central Bank has launched the Islamic Finance Research Support Program with a cash reward of 100,000 Saudi Riyal to the top 2 research papers in a bid to encourage research within the financial sector. The program expects to highlight the prominent role played by Saudi Arabia in the global Islamic finance sector and will also assist in fulfilling Saudi Arabia's targets of improving its knowledge position under the Saudi Vision 2030. Cryptocurrencies, or cryptos as they are more commonly known, are coins that can be used to buy goods and services. But unlike regular coins, cryptos are a virtual currency that uses an online ledger with strong cryptography to facilitate security of these online transactions. Bitcoin remains the most popular cryptocurrency. However, it has seen volatile price movements this year, losing nearly half of its value in May 2021. Some investors are more interested in trading Bitcoin for profit, with the speculative nature of these investments causing its value to skyrocket.
If we were to define a cryptocurrency in very simple terms, it's a digital representation of value that uses cryptographic techniques. That's all it is. Right? So it's just a digital representation of value that's operating on a digital space. This cryptocurrency, the word cryptocurrency is sometimes misleading because not every crypto is a currency. So the better word I would say is to use crypto assets, right? A crypto asset as the umbrella term. And that can represent currency, potentially an asset, a utility, a service, or anything.
The cryptocurrency hype has caught on in the Shariah-compliant investor space across the world, with more Muslims looking to trade and invest using cryptos. However, several doubts remain regarding the permissibility of trading in cryptocurrency under the purview of Sharia law, which raises the need for a specific index or a clear Sharia screening methodology.
So when it comes to an index or methodology or any screens, there's nothing officially produced yet at a regulatory level or a Sharia board level or any kind of Sharia advisory council of a central bank, as an example. What we do have are authors writing, developing ideas and sharing things. So my personal research concludes there should be at least 5 different screens right now anyway in the present time that we live in, because there's no regulatory oversight. Number 1 is legitimacy screening. Is it legitimate? Is there a scam? Is there anything fake? For example, are the tokens more than 30% allocated for the management team? For example, it might be 60%, 70% allocated for the management team, and only 30% are floated or for sale and trading. That shows you that it's skewed and it's favoring the team behind the token. Number 2 is a project screening. What that means is there should be a review of the project behind the token, behind the crypto asset. What's the project about? What's the objective? What are they trying to achieve? It should not be that the objective is to open a conventional financial services firm or a casino or an exchange which is not Sharia compliant. If that's the case and the token is powering that, there could be a non-compliance risk. Number 3, a financial screening. Just like how we do a financial screen for shares, there should be a financial screening for tokens which are equity tokens. Equity tokens give an investor a share in the underlying project. So if you have a share in the underlying project, the project will of course be exposed to borrowing, lending potentially, interest receivables, impure income. So any token or any project which gives an equity stake to yourself, that token, that project should be screened for its financials to ensure it aligns with Sharia principles. Number 4 is token screening. And this refers to understanding the utility of the token. What is this token giving you? What type of utility do you have? Do you have access to a service? Do you have a payment token? Do you have governance rights? Because tokens can be designed to give you any such right. You can have any of these rights. So we need to understand this particular token, what is service. It shouldn't be giving you access to a non-compliant service, or you shouldn't be governing something which is not Sharia compliant. And finally, the 5th screening is the staking screening, because as you know, there are several ways to earn an income on a protocol, on a blockchain. You could earn an income through mining, which is what we call a proof of work. Otherwise, you could also earn for staking tokens, where you validate a blockchain and a transaction. So what we call a proof of stake. So we need to make sure that such methods of staking or protocols or consensus mechanisms are Sharia compliant and align with Sharia principles.
Key questions that arise on the part of Muslim investors are the origin of the currency and its issuance, the assets or lack thereof backing the currency or transactions, the way in which cryptos are distributed, and the issue of uncertainty, potential gharar. While some cryptos are deemed Sharia-compliant, answers must be sought to questionable areas that may arise in the minds of investors, suggesting non-permissibility, such as the lack of regulation, ambiguity, strong volatility, investors' security, and the environmental cost of mining.
When it comes to regulators, the best thing is for any jurisdiction is to have regulation as soon as possible. Because regulation does help. It allows the market to move in a unified way and in a very secure way. Otherwise, when there's no regulation, you'll see all sorts of things going on. At times, it can be helpful because it allows you to be innovative, but regulation really sets the map and the journey of how things will proceed forward. So to kind of balance regulation with innovation, this idea this sandbox, which was like a Sharia sandbox or innovation sandbox, whatever you want to call it, it allows us to test different ideas. So one from a Sharia perspective, and even beyond the Sharia perspective, just generally, when we're dealing with new phenomena, we should be able to engage with that phenomenon to understand the real nuts and bolts of what we're dealing with, and then to have an informed decision. When we do reach a conclusion and decision, it's well informed, it's not premature, it's not rushed, it's not hasty, and we have a unified approach. Because what's happening right now, due to the lack of regulation, lack of expertise, lack of knowledge creation, lack of research, and everybody has a different worldview and everybody's spread across the world, we're seeing different opinions, there's a lot of confusion in the market. That is a barrier to entry, and it also hinders innovation. So we could have had potentially a decentralized Islamic investment fund. Potentially. I mean, it can happen, why not? But because of the uncertainty, lack of regulation, the risks involved, people rather go the traditional route and just do things as things have always been done. Because there's no risk management framework to deal with the uncertainty that comes with the crypto space.
Given that cryptocurrency investing has the potential to yield significant amounts of wealth for its investors, it is interesting to identify whether these are applicable for purposes of zakat.
When it comes to zakat and cryptos, it all depends on the type of crypto asset, right? And the intention behind purchasing a crypto. Right? Why did you purchase? So for example, if the token, the crypto asset, is a payment token, where the core utility is to use this token as a medium of exchange, right? It will always be zakatable because it's being used primarily as a currency. That's its core function and utility. Then we'll say for zakat purposes, it'll always be zakat. However, when it's a utility token, an asset-backed token, a governance token, then it's all about what it's representing. So for example, a utility token, generally, if a person has bought a utility token without the intention to resell and make profit, it's just purely just to hold this token to use on a platform, there is no zakat on the utility token. However, if a person has purchased this token purely with the intention of selling on, so it's stock, it's a business for them, it'll always be zakatable. And that holds true for all tokens. Whenever a person has an intention to do business in tokens, to trade tokens, you're only trading for the short-term gain. There's no other objective.
The crypto industry is characterized by its constant innovation and rapid growth. More recently, the rise of meme tokens, which has prompted substantial moves in the market, has been attracting investors' attention. Meme tokens, which started out as online jokes, gained popularity on social media, which led their value to soar in a few hours.
Everybody knows what a meme is. But when you try to define a meme token, there's no real one definition, rather its characteristics and features. So for example, the token is based on a joke or is initiated on just an idea of jest, really. It's generally on social media platforms, that's the catalyst. The social media really gives that surge to that token. Generally speaking, it's more novice traders, millennials engaging with that token. the popularity is disconnected to the fundamentals of the token. So it has no real economics in the background, or tokenomics. Rather, it's purely hype on a platform. There might be a popular figure promoting this token. It could be such that the tokens are overpriced generally. There is much more volatility. Such tokens generally have a rapid spike in value just because of social media buzz. That's what meme tokens generally represent. It's all these different features and characteristics. My personal view is that such tokens do not align with Sharia principles. And the reason is because Sharia has a very clear narrative when it comes to buying and selling something. You can only buy and sell something which is of benefit and utility and is genuine, right? It has a genuine utility and use case. Sharia does not allow two counterparties to come together where one party is paying money or paying something of value, whilst the other party supplies something which has no value, or it's just it's not bona fide, it's not genuine, it's just something which is a joke, right? So that creates an imbalance in the relationship, and Sharia does not allow that. In all contracts of exchange, both parties must supply something which is genuine and valuable. It cannot be that one party is disadvantaged by receiving something which is not really genuine or valuable, whilst the other party is paying something which is valuable.
Decentralized finance, or DeFi, another emerging trend showing a lot of potential, is a form of finance that uses smart contracts on blockchain. The most known example of a DeFi is Ethereum. DeFis do not rely on central financial intermediaries such as brokerages, exchanges, or banks to offer traditional financial instruments.
DeFi is short for decentralized finance, right? It's an umbrella term for a variety of financial applications in cryptocurrency on blockchain. The building blocks of DeFi are really three: crypto assets, blockchain, and smart contracts. And smart contracts, I would say, are the key, or you could say that the blood of decentralized finance. Majority of the applications right now in this decentralized finance space, it's being powered by the concept of smart contracts, which are just programs, really. They're programs which are coded to do certain things, which don't need intermediaries to do those things, right? So that's what smart contracts are, and they're powering the entire DeFi space. The common applications right now in DeFi and the trends, there are three trends. And to be honest, majority of these trends are more in the conventional space. We haven't seen much in the Islamic financial space yet, but I do believe in the near future there'll be several applications which do come to the fore and come to the market. So the three areas are monetary banking services. That's one area where DeFi is growing. Another area is decentralized exchanges. So you can have an exchange which doesn't have any central authority being the market maker. You don't have a central body being a market maker and matching orders. You don't have that. It's a decentralized exchange. It uses what we call a liquidity pool. It's a completely different concept in decentralized finance. And the third is a lending platform. There are several platforms now which allow borrowers and market participants to borrow with interest, so it's of course not Sharia compliant, on such a platform. Right? So that's the lending platform. So these are three trends which are very popular in DeFi, and we're seeing popping up across the globe.
Given the seemingly large potential of cryptocurrency, it is important for investors to understand the risk associated with this new investment instrument. Some Islamic scholars have stated that, despite the transparent nature of cryptos, the inability to completely know the identity of traders due to the pseudo-nature of individuals online could lead to illegitimacy in transactions. News surrounding recent scams involving founders of crypto exchange platforms that stole coins worth millions of dollars coming in from Turkey and South Africa have raised many flags regarding fraud risk.
Beyond the common risks like market risk, commercial risk, fluctuation rate risk, all these other risks, I would say three are key for the crypto sector and the entire space. Number one is fraud risk. There's a clear risk of fraud because the whole crypto industry right now, it's not regulated. Only now you are seeing regulators from different countries stepping in and taking action. Number 2, I would say, is Sharia non-compliance risk. That's very high as well. The reason for that is there's very little knowledge created yet on the different applications. The knowledge creation is taking place, and therefore it's not always easy to grasp Sharia concerns and Sharia issues because these are very new technologies and innovative ideas. Number 3 is regulatory risk. There's a real risk that there might be a genuine, sound, successful crypto project, but the regulators might ban crypto in a country, or in a region, in a jurisdiction. And that risk is real. And because there's regulatory risk, the uncertainty that comes with the regulators, it can really impact all the investors.
Despite the dangers and risks involved in crypto investments, the technology seems to have immense potential to revolutionize the world of money and the way people transact with one another.